Disclaimer: this video is for educational and entertainment purposes only and does not constitute financial advice. Trading stocks and options involves risk. The following analysis provides a comprehensive description of the SMH price action for the week starting December 28, 2025. Macro Weekly Analysis. Let's break down the key technical levels. I've color-coded the chart for clarity. Red for resistance and green for support. Also, lighter red lines indicate immediate resistance, while darker red lines mark the farthest overhead ceilings. Conversely, lighter green represents the nearest support, backed by farthest structural support, shown in darker green. Now, let's look at all green support trend lines, starting with lighter green support lines. One represents the short-term bull run in SMH since the tariff correction in April 2025. Two medium green support lines. One line represents a trend line, connecting the major lows of March 2020 and another from October of 2001. Darker green support represents a trend line from October 2022. Similarly, now showing resistance lines. The lighter red resistance line that price is currently hitting against originates from January 2019 lows, followed by a medium red resistance line from COVID, lows of March 2020, and a farther resistance line from lows of December 2018. Now let's look for chart patterns at the macro level. The technical landscape is currently defined by two nested rising wedge patterns. These patterns are denoted by the converging trend lines shown in lighter green, lighter red, and lighter green and medium red. This wedge within a wedge indicates that the price action is becoming extremely compressed as it nears the approximately $360 mark. As these formations converge, price action is becoming increasingly compressed. Historically, a break from this level of coiling triggers a significant directional move, statistically favoring a resolution to the downside. Now let's look a bit at the micro picture, looking at the 4 hours chart. Based on momentum assessment, the most significant warning sign accompanying this price action is a prominent bearish RSI divergence. While the price of the SMH has continued to grind toward higher highs from mid-year through December, RSI has been showing lower highs. This RSI divergence indicates that the internal momentum behind the current rally is fading. If the SMH fails to break decisively above the $378 resistance zone with fresh momentum, the most likely technical outcome is a bearish reversal. A break below the lower light green wedge support line would signal that the squeeze has ended in favor of sellers, potentially leading to a sharp correction towards next medium green support line at around $308, with a pit stop at $336 for an approximately 14% correction. If that fails, it could correct to the darker green support line at $272 for an approximately 25% drop. In the highly unlikely scenario of the wedge pattern breaking to the upside, price could reach $380 to hit a resistance line shown by the darker red line. Join the Golden Trades Discord community for live alerts and analysis. https://thegoldentraders.com. For more free trade setups, make sure to subscribe to the channel.